This video is designed to help you start a wrecker business. At the end of the video, you'll find a valuable gift. It's a wrecker business plan that you can download, and will lay down for you, step by step, everything you need to know to start a successful wrecker business of your own. If you are new to this channel, make sure to hit the subscribe button for more videos like this. There are a lot of ways that you can make a living by towing. You can tow disabled cars, impounded vehicles, etc. So, take some time to consider what kind of work you want to do, and who your ideal customer is. The number of possibilities and paths are endless. And you also have to consider if you'll be pursuing any contracts and, if so, from whom. You'll also need to consider the type of tow truck you wish to operate. You'll be asking yourself, how much does a tow truck cost anyways? Well, the price varies and depends on a number of factors. And then you have to think about the expenses that come along with getting your business started. What will the overhead costs be? What other expenses will you have to consider, for example, licenses and permits? What kind of tow truck will you need to do the work you want to do? How much will the tow truck cost? And, of course, how much will your tow truck insurance cost? When will you turn a profit? And how will you price your towing services? All businesses are not created equal, and this goes for your wrecker company. Partner with professionals that know your industry, for example, truck dealerships, funding companies, accounting firms, an insurance agency, and even a mechanic shop if you don't have one. Pairing yourself up with people that know your business is smart business. They may be able to offer advice that can help you reduce costs. Make sure that your business is official. You have to go through the process of making your business a legal entity when you start a wrecker business. When you do that, you're making it all official, and you're also shifting liability from you as an individual to the business itself. Basically, what we're saying is this: don't operate under your own name. This is for a couple of reasons. First, it provides a layer of financial protection for you if, for some reason, insurance doesn't pay out a claim. Second, it's good marketing. People like doing business with businesses. Having a legal entity makes you seem more professional. Get your taxes in order. Yep, you can't avoid taxes. You have to be prepared for the proper taxes before you start a wrecker business and hit the road. Make sure that you've got all your tax information sorted out. You may want to partner with an accounting firm or business tax professional. That way you're not accidentally leaving hard-earned money on the table or misunderstanding any complicated rules. Get proper insurance. Insurance is a complex piece of your business, and it's the second most expensive piece next to your equipment. It's really important to be aligned with the right insurance company that knows what you need. You may not need all the various pieces of insurance unless you are doing a variety of towing operations, rotational, roadside, private, auction, etc. There are many different types of insurance wrecker businesses, and there are many risks that you need to protect yourself from. Take a look at this overview of 5 common wrecker coverages. Auto liability. If you're at fault in an accident, your auto liability coverage can help you cover your legal expenses and your legal obligation to the other driver. Bodily injury liability can help pay for the other driver's medical bills. Property damage liability can help you cover the costs of repairing or replacing the other driver's car, or other property you damage in an accident. Garage liability. This protects you by covering your liability if the services your business provides, or its day-to-day operation causes someone bodily injury or property damage. Physical damage insurance. Physical damage insurance can help you get your tow truck back on the road as soon as possible if it somehow gets damaged. Collision coverage can help pay to repair or replace your truck if you're in an accident or otherwise collide with something. Comprehensive coverage can help pay to repair or replace your tow truck if it's damaged by something other than a collision, such as fire, vandalism, an animal strike, or falling objects. It can also protect you if your truck is stolen. On-hook coverage. On-hook insurance can help protect you financially by covering the client's car while it's hooked up to your tow truck. It covers losses such as collision. Garage keeper's insurance. If you ever have care, custody, or control of your client's vehicles, garage keeper's insurance can help protect you if those vehicles are damaged by fire, vandalism, storm damage, etc. while they're in your care. Marketing. Of course, your wrecker business can't thrive unless it has customers. You have to get the word out there that you're the best of the best. In other words, commit to marketing your wrecker business. The only way people will know you're around is if they can see you in more than one place. Advertise. Research the best places and methods to promote your business, in the most cost-effective way. The better you advertise, the more jobs you'll likely get. The next part of the video is not specific to the wrecker business. Nevertheless, this knowledge is essential for success in the wrecker business, as well as in any other business. Ignored at your own peril. Operating a successful wrecker business will depend on the following 4 conventions. 1. A practical plan, with a solid foundation. 2. Dedication, and willingness to sacrifice, to reach your goal. 3. Technical skills. 4. Basic knowledge of management, finance, record keeping and market analysis. As a new owner, you will need to master these skills and techniques if your business is to be successful. Finding a niche. Small businesses range in size from a manufacturer, with many employees, and millions of dollars in equipment, to the lone window washer, with a bucket and a sponge. Obviously, the knowledge and skills, required for these 2 extremes, are far apart, but for success they have one thing in common. Each has found a business niche, and is filling it. The most critical problems you will face, in your early planning, will be to find your niche, and determine the feasibility of your idea. Get into the right business at the right time, is very good advice, but following that advice may be difficult. Many entrepreneurs plunge into a business venture, so blinded by the dream, that they fail to thoroughly evaluate its potential. Is your business idea feasible? Before you invest time, effort, and money, the following exercise will help you separate sound ideas from those bearing a high potential for failure. Identify and briefly describe the business you plan to start. Identify the product or service you plan to sell. Answering yes to any of the following 3 questions means you are on the right track. A negative answer to all of them means the road ahead could be rough. 1. Does your product or service satisfy an unfilled need? 2. Will your product or service serve an existing market in which demand exceeds supply? 3. Will your product or service be competitive, based on its quality, selection, price, or location? Market analysis. For a small business to be successful, the owner must know the market. To learn the market, you must analyze it, a process that takes time and effort. You don't have to be a trained statistician to analyze the marketplace, nor does the analysis have to be costly. Analyzing the market is a way to gather facts about potential customers, and to determine the demand for your product or service. The more information you gather, the greater your chances of capturing a segment of the market. Know the market before investing your time and money in any business venture. The following questions will help you collect the information necessary to analyze your market and determine if your product or service will sell. This brief exercise will give you a good idea of the kind of market planning you need to do. An answer of no to any of the questions indicates a weakness in your plan, so do your research until you can answer each question with a yes. 1. Do you know who your customers will be? 2. Do you understand their needs and desires? 3. Do you know where they live? 4. Will you be offering the kind of products or services that they will buy? 5. Will your prices be competitive in quality and value? 6. Will your promotional program be effective? 7. Do you understand how your business compares with your competitors? 8. Will your business be conveniently located for the people you plan to serve? 9. Will there be adequate parking facilities for the people you plan to serve? Planning your startup. The following questions are grouped according to function. They are designed to help you prepare for opening day. Merchandise. Have you decided what items you will sell or produce, or what services you will provide? Have you made a merchandise plan, based upon estimated sales, to determine the amount of inventory you will need to control purchases? Have you found reliable suppliers, who will assist you in the startup? Have you compared the prices, quality, and credit terms of suppliers? Business records. Are you prepared to maintain complete records of sales, income and expenses, accounts payable, and receivables? Have you determined how to handle payroll records, tax reports, and payments? Do you know what financial reports should be prepared, and how to prepare them? Finances. A large number of small businesses fail each year. There are a number of reasons for these failures, but one of the main reasons is insufficient funds. Too many entrepreneurs try to start and operate a business without sufficient capital, money. To avoid this dilemma, you can review your situation by analyzing the following 3 questions. 1. How much money do you have? 2. How much money will you need to start your business? 3. How much money will you need to stay in business? In order to answer the second question, how much money will you need to start your business? You need to prepare an estimate of all your startup costs. Here is a list of items you may need to take into account. Note that this list is for a retail business. Items will vary for service, construction, manufacturing or online firms. Decorating and remodeling, fixtures and equipment, installing fixtures and equipment, services and supplies, beginning inventory cost, legal, professional fees, licenses and permits, telephone utility deposits, insurance, signs, advertising for opening, unanticipated expenses. Now, the answer to the third question, how much money will you need to stay in business? Must be divided into two parts, immediate costs, and future costs. From the moment the door to your new business opens, a certain amount of income may come in. However, this income should not be projected in your operating expenses. You will need enough money available to cover costs for at least the first 3 months of operation. The following list will help you project your operating expenses on a monthly basis. Typical expenses for 1 month may include your living costs, employee wages, rent, advertising, supplies, utilities, insurance, taxes, maintenance, delivery, transportation, miscellaneous. Now sum up the total estimated monthly expenses and multiply it by 3. This is the amount of cash you will need to cover operating expenses for 3 months. Deposit this amount in a savings account before opening your business. Use it only for those purposes listed in the above list, because this money will ensure that you will be able to continue in business during the crucial early stages. By adding the total startup costs to the total expenses for 3 months, you can learn what the estimated costs will be to start and operate your business for 3 months. By subtracting the totals of the lists from the cash available, you can determine the amount of additional financing you may need, if any. Now you will need to estimate your operating expenses for the first year after startup. The first step in determining your annual expenses is to estimate your sales volume, month by month. Next, determine the cost of sales. You may want to use a spreadsheet to do this. After startup, the primary source of revenue in your business will be from sales, but your sales will vary from month to month because of seasonal patterns and other factors. It is important to determine if your monthly sales will produce enough income to pay each month's bills. An estimated cash flow projection will show if the monthly cash balance is going to be subject to such factors as the following: failure to recognize seasonal trends, excessive cash taken from the business for living expenses, too rapid expansion, and slow collection of accounts if credit is extended to customers. Conclusion: if you have carefully answered all the questions in this video, you have seriously thought about your goal. However, there may be some things you may feel you need to know more about. Owning and running a record business is a continuous learning process. Research your idea, and do as much as you can, yourself, but don't hesitate to seek help from people who can tell you what you need to know. As we conclude this video, it's time you get your free record business plan gift. Go to the description below this video to get it now. It is completely free, no strings attached. Thanks for watching. If you enjoyed this video, please like and hit the subscribe button for more videos like this.